Welcome, and thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance, ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In this episode, I'm joined by Donna Halverstadt, a managing director on KBRA's insurance team. Donna and I chat about her recent research report titled AI in Insurance, The Future is Now. This report takes a deep dive into how AI is transforming the insurance industry, the opportunities it presents, and the risks insurers need to manage. AI is becoming an increasingly important tool in insurance with applications spanning underwriting, claims processing, fraud detection, and customer service. KBRA's research highlights AI's potential to boost efficiency, improve productivity, and strengthen customer relationships. But at the same time, it underscores some key risks such as regulatory challenges, data privacy concerns, and bias in AI-driven decision-making. Hi, everyone. This is Arianne Schreier, an Associate Director on KBRA's ESG team. Donna, thanks so much for coming on to discuss your recent research piece titled AI in Insurance, The Future is Now. To start, can you provide an overview of why AI is becoming so important in the insurance space?
Thanks for having me, Ariane. Let's start with what we mean by AI. AI broadly refers to the integration of computer science and data into technologies that can perform tasks traditionally performed by humans. This includes tasks such as content generation, summarizing, analysis, and even decision making. AI encompasses various subfields, including speech recognition, computer vision, machine learning, deep learning, and natural language processing. AI has the potential to really shake up the insurance industry. Insurers that effectively deploy AI can achieve greater efficiency, increased productivity, and improved customer satisfaction, factors that can positively impact revenues, expenses, and related competitive position. Over time, these benefits could become table stakes, and insurers left behind could find themselves at a competitive disadvantage. We can see AI being used across multiple areas, including marketing, underwriting, claims processing, and fraud detection. It can change how insurers operate. A big advantage is AI's ability to analyze massive amounts of data more quickly and sometimes more accurately than manual processes allow for, and it can also allow companies to make smarter, more personalized decisions. One of the keys to maximizing these potential benefits is quality and quantity of data, both internal and external. So, having implemented a cohesive data strategy that supports clean, well structured, and readily accessible data is an important prerequisite. Once that in place, there are many potential use cases for AI. Let's take marketing and distribution, for example. AI is helping insurers automate content creation and can even personalize outreach. It can speed up paperwork processing and, in certain cases, decision making, making policy marketing, distribution, and underwriting more efficient. On the underwriting side, AI can summarize vast amounts of data, expediting an underwriter's review time. It can even leverage information from personalized and real time external sources like telematics and IoT devices, which means insurers can move beyond broad, static actuarial tables and develop dynamic, personalized, risk based pricing models. More generally, there's automation. AI powered self service tools are reducing the need for human intervention in routine tasks and freeing up agents and employees to focus on more value added activities. This can lead to higher productivity, better customer experiences, and lower costs, all of which could have a significant impact on an insurer's financial performance. Of course, AI driven content and decisions should be subject to human review and refinement in order to guard against inaccurate, misleading, or inappropriate content, to ensure that decisions are not arbitrary or discriminatory, and also to make sure that AI outcomes align with the insurer's brand and values.
So, underwriting and claims processing seem to be two of the most impacted areas. How is AI changing these processes?
Great question. AI has the potential to reshape how insurers assess risk and process claims. Let's start with underwriting. Traditionally, it's been a time consuming process, relying on lots of historical data, somewhat generalized risk models, and detailed analysis, as well as less than fully automated processes. But AI can change that by making underwriting faster, more precise, and more dynamic. Not only can historical information be analyzed more quickly, insurers can now analyze real time data from telematics and wearables, allowing for things like usage based insurance models where pricing is tailored to individual behavior. Now, on the claims side, AI can streamline workflows in a major way. It can automate tasks that used to take days or weeks or even longer, quickly summarizing policy terms and helping insurers make coverage determinations faster. And claims adjusting processes can incorporate more data more quickly. For example, using computer vision technology can aid in the capture and analysis of images and videos related to claims. A drone may be able to get into damaged areas and take those images better and more quickly than a human would even be able to access the area. This means insurers can assess damage, verify claims, and speed up settlement times, potentially with more accuracy and fairness. As another example, AI can be used to analyze years of claims history data to identify trends. And of course, fraud detection is an area ripe for the use of AI, as AI can spot suspicious patterns and anomalies much faster than traditional methods, making it easier for insurers to flag potentially fraudulent claims while still ensuring legitimate ones get processed efficiently.
You touched on customer satisfaction, which brings me to my next question. How is AI reshaping customer engagement in insurance? Or more specifically, how is AI reshaping how insurers interact with policyholders?
AI has the potential to have a huge impact on how insurers interact with their policyholders. Today's customers expect instant service and personalized experiences, and AI is making that possible. For example, chatbots and virtual assistants can try to handle routine inquiries so that policyholders can get 24/7 support for things like checking their coverage or tracking a claim. Also, AI is making customer interactions more personalized. By analyzing customer data, insurers can offer tailored policy recommendations. AI can also help insurers identify common pain points by analyzing patterns in customer complaints, claims issues, or policyholder feedback. This means companies can address problems before they escalate, leading to a smoother and more customer friendly experience overall. More generally, faster responses, greater accuracy, that's all a positive for customer satisfaction.
And beyond customer service, how is AI influencing risk assessment and predictive modeling?
AI is taking risk assessment to a whole new level. Instead of relying solely on historical claims data and static models, insurers can now use AI to process real time data from telematics, wearables, and IoT devices. This is a big shift because it can allow insurers to continuously refine their risk evaluations. Rather than setting broad pricing categories, AI enables real time individual risk assessments, leading to more precise pricing and even usage based insurance.
With all these benefits, what challenges should insurers be aware of when adopting AI?
AI is powerful, but it's not without risks, and it's important for insurers to develop an AI governance framework and guardrails. One of the big concerns is unintentional bias. If the data used to train AI models contains biases, and it can lead to discriminatory decision making. Cybersecurity and data privacy are also major concerns. Insurers handle a huge amount of sensitive customer data, making them prime targets for cyber threats. AI systems need strong security measures to prevent data breaches and unauthorized access. And then there's regulatory compliance. With AI playing a larger role in operations and decision making, insurers have to ensure their AI driven processes align with existing and emerging regulatory regulations and consumer protection laws. Another challenge to implementing an effective AI program is budget constraints and talent shortages. AI requires significant investments not just in technology, but also in skilled personnel who can develop and maintain these systems, as well as employees who are skilled in using them. Not every insurer has the resources to fully integrate AI at scale.
Speaking of regulations, how are governments and regulators responding to AI in insurance?
Regulatory oversight is evolving quickly. In the US, the NAIC issued a model bulletin on AI back in December of 2023, touching on areas such as compliance, fairness, and data governance guidelines. Many countries and regions have adopted broad, i.e., not specific to insurance, AI regulations or guiding principles. And in addition to regulations that directly tie to AI, there may be a host of other guidelines, rules, and regulations that indirectly impact AI development and use. This evolving regulatory landscape presents a clear compliance risk for insurers who are not vigilant. To mitigate the risk of noncompliance and to protect their reputation while maximizing benefits of AI, Insurers need to implement a robust AI governance framework with verification and testing methods, as well as comprehensive documentation, risk management, and compliance monitoring.
And finally, looking ahead, what does the future hold for AI in insurance?
In our view, AI adoption is only going to accelerate. We'll see more automation, advanced predictive analytics, and AI powered tools. Insurers that have invested effectively in data quality, governance, and modernization will be best positioned to benefit from AI and stay competitive and compliant.
Thank you to Donna for a very interesting discussion. This concludes our episode. Please email esg@kbra.com with any questions or comments. We also encourage you to visit KBRA's ESG website at esg.kbra.com, where you can find ESG research related to the topics discussed in this episode, further details on KBRA's ESG approach, and other ESG related media items. You can also join our mailing list to access our ESG Weekly Roundup newsletter.